Let's get over to our first guest in Chicago to speak specifically about that commodity prices, the strong run that they've had. That included overnight on the back of the US dollar taking a nosedive. Basically, gold hit yet another record during the session, with analysts attributing the low dollar, investment sentiment, and also rising physical commodities prices behind the rally. But Larry Shovers from Efficient Capital Management, also author of Trading Options in Turbulent Markets, coming to us live from the CME Group. Larry, what do you think about the comments of my guest here? The commodity prices are getting a little bit out of control, and looking down the track a bit, without the liquidity, there has to be some kind of correction come through.
You know, we are in a classic commodity bubble. Commodities right now are a great trade, perhaps not a good investment. But that said, these bubbles tend to last a lot longer than you and I can stay solvent. So to say that they're going to correct anytime soon is anybody's guess. There's so much going on, so many moving parts in the world. I think the big factor that could cause a correction is if oil remains above $100 a barrel, which it is right now, obviously, for a long period of time, which would be just a destruction in demand and would slow down the worldwide recovery.
And that would then filter through to other commodity prices?
Absolutely, because right now we're seeing all the commodities rally. Gold, silver, I mean, silver outperformed gold today. Copper, even aluminum continues to rally. And as right now, the oil price isn't a big effect, but it should be on aluminum. But the fact of the matter is, if oil continues to stay above $100 a barrel, we will see a slowdown in commodity prices towards the end of the year, but not right now.
And just take us through some of the moves then in commodities just overnight, because we know that our Australian dollar is very closely correlated with commodity prices. Take us through the main ones.
Yeah. Well, the main one right now, I mean, to me, has always been the Australian dollar and the Canadian dollar, both of them commodity linked. And the caller before was talking about an eventual rise in interest rates in the United States, which would cause weakness in the Australian dollar. But again, I don't think that's going to happen anytime soon. The gold prices continue to go up. I mean, shouldn't we be worried that interest rates are going to go higher? Gold doesn't seem to think so. So with that in mind, I still think Australian dollar, the Canadian dollar are both good buys.
And in terms of that gold price, there must be a concern amongst some with it sitting at 1,500 about the end of QE2. Are we seeing any jitters showing across any of these commodities?
Yeah, some people do think that gold is the safe haven right now, but good grief, if you think that interest rates are going higher, why in the world would you buy gold right now? Because historically speaking, gold has been inversely related to interest rates. So gold should be going down, but we're in just a wide range commodity buying spree right now, and everything is up for grabs. Oil, gold, silver, copper, no matter what it is, people need to buy it. And as long as money stays cheap, I think it's going to stay cheap, the commodity rally will continue.
Larry, with the equity markets today, we saw almost 200 points on the Dow. It's funny because, you know, at the start of the week even, it felt like the earnings season was disappointing, it was lackluster, and suddenly by the end of the week, off to the races because of the earnings reports. A lot of those were tech companies today. Do you think that the market can sustain these kind of gains? Maybe not 200 points a day, but, you know, are we looking at some gains ahead?
Yeah, I do think the equity market can sustain, and keep in mind the S&P was around 1328. 1340 is the big point that it needs to get to. That's where you start to think maybe we're a little bit overheated. But there's so many moving parts. We have so many tech earnings coming out in the next couple of weeks, not to mention the U.S. Fed FOMC meeting coming out, the April economic data. It seems like the mood is that the stock market is completely undervalued, even with all these things, unknowns going on in the world. The fact is we are undervalued and the market should continue to rally.
Larry Shovers, thank you so much for that. We appreciate your time.